So Wall Street has really turned bearish on Apple in the last few months, but there was an article that came out recently that went over 3 companies that Wall Street thinks that Apple should buy. So what I'm going to do in this video is break this down for you, go over these 3 picks, and also give you my thoughts on these 3 picks as well. But before we go any further, I want you to drop a huge like down below. I want you to comment on what companies you think I'm going to cover in this video. And then at the end of this video, we can kind of compare to see if your predictions aligned with what Wall Street thinks here. So let's try to get this video to 100 likes, guys, but either way, let's get into it right now. So Apple has a lot of money on hand, and when I say a lot, I mean $200 billion plus a lot. But the funny thing is their largest acquisition to date was Beats, where they paid $3 billion for the company. So historically, Apple is not really known to splurge when it comes to acquisitions. They are pretty stingy with that in my opinion. So it is important to note that the acquisition possibilities that we're going to cover today with these 3 companies may not ever come to fruition, but it is interesting to explore and see where Apple could go with these acquisitions. So anyways, getting into it, the first acquisition that they covered here was Salesforce. So out of the 3 companies that I'm going to go through with you guys right now, I would say that Salesforce is the one that I agree with the least. The reason that they put out here in this article is that Apple isn't in the enterprise software game, and by buying Salesforce, they would change from a consumer-focused hardware designer to a business-focused software as a services provider. Now, in my opinion, I believe that Apple's already in the process of successfully transforming their business from a pure hardware company to a software as a services company as well. And this is pretty evident from their services business, which is bringing in almost $10 billion every single quarter. And of course, the number is expected to keep growing year over year as well. The argument here, as kind of like a summary, is that Wall Street wants to see more growth from Apple, and with an acquisition from Salesforce that would be possible because Salesforce currently has around a 30% growth year over year. But funny enough, Apple is actually a very high growth company, and they're actually growing 20% plus year over year. And when you consider that they had a $1 trillion market cap just a few months ago, to grow 20% with a company of that size is absolutely incredible. Yet Apple continues to defy the odds and consistently grows year over year. And even if this year, 2019, may not be the best growth year for Apple, I still think that growth will come in at double digits year over year. Now, I personally don't think that this growth story is a good enough reason for Apple to purchase Salesforce. There's plenty of other companies out there with a similar story of growth, software as a service, etc., that Apple could purchase as well, companies like Adobe, for example, which would make a lot more sense compared to Salesforce. And really, Salesforce is in an industry that Apple doesn't really play in right now, and Apple hasn't really shown any interest in wanting to play in this industry either, so it really doesn't make sense for them to acquire this company. Now, don't get me wrong, Salesforce on its own is a very solid company. It's an incredible investment for those who got into this company early on, but I don't think that Salesforce is the best company for Apple to acquire. Now, our second company here is Disney. Now, this here makes a bit more sense, but I still don't think that it's quite right for Apple. So Disney is expected to enter the streaming services game in 2019 with its Disney Plus platform, and it is expected this will be a pretty successful launch for the company. So if you didn't know, I'm actually very bullish on Disney for 2019, and I have covered my reasons for my bullish thesis in a video, which I'll link up here if you're interested. But I just want to get it out there. I just think that it's no secret that I think that Disney will be able to successfully launch their streaming service. Now, what's interesting here is that Apple and Disney have had a history in the past. And that's because Steve Jobs was on the board for Disney, and he was the CEO of Pixar before they sold it off to Disney. And as this article states, Apple really wants to get into family-friendly content, and that's exactly what Disney plans to release with their streaming service. But there's a really big issue here with the possible acquisition of Disney, and that's that Disney is valued close to $200 billion. So an acquisition here would pretty much eat up majority of Apple's cash. In fact, this would actually put Apple in debt because they do have some outstanding debt, and when you factor in the amount of debt they have versus the amount of cash that they have, the net balance is around $135 billion in cash. So a $200 billion acquisition would mean that they would have to take out a loan of around $65 billion. So really, from a financial standpoint, this acquisition does not really make sense because Apple really prides itself on its balance sheet and the amount of cash it has on hand. And really, when you look at Apple's balance sheet, this is kind of the core reason why it attracts so many different types of investors. You get value investors, you get growth investors, and you get dividend investors as well. And if this fundamentally changes and Apple becomes a company that's $200+ billion in cash to say $70-80 billion in debt, then a lot of investors will most likely flee the stock, as the fundamentals of the business would have changed drastically, and this could hurt Apple over the short term and long term as well. Now, in my opinion, it would make more sense for Apple to go out and actually purchase Netflix, because Netflix currently has a market cap around $130 billion, so they could purchase Netflix outright without taking out any more debt, and this would actually kind of put them in a position where they're automatically the number one in the streaming services game. I mean, if you're going to be spending over $100 billion on an acquisition, you would want to be the number one player in that space and not be an up-and-coming potential player which may be able to take that number one spot over the long term. Apple is kind of known to have very high levels of services offered, kind of provide a lot of value to their customers, and Netflix kind of fits that narrative as well, which is why I think it makes a lot of sense for Apple to purchase Netflix instead of Disney. Also, I think a really big negative of purchasing Disney is that it comes with a lot of other segments that Apple may not necessarily want. So things like their parks division or even ESPN. These are things that Apple does not really have any interest or has shown any interest in. So it would not really make sense to pay such a premium for all these extra services that they don't really want. So this is why I think in a nutshell, Disney does not really make any financial sense for Apple to purchase. It would put them in a very bad position financially. And there's better options out there if they did want to enter the streaming services game with an acquisition. Now, coming in at the third option here is Tesla. Now, this is where it's at, and this is, I think, the company that makes the most sense for Apple to purchase right now. So it's no secret that Apple is working on something in the electric car space, but it is a secret on what specifically they are working on. And as you can see, over the last few months, Apple has slowly been poaching ex-Tesla employees to work on a potential electric car at Apple. And no one really knows why, but there is a lot of speculation that it's most likely for an electric car that Apple plans to possibly release in the future. Now, there's a lot that Apple and Tesla have in common as companies. So the two things that I would say that come to mind right away is their brand and their quality of their products. So Apple really prides itself on its brand, and they stand behind every single product that they release to be the best quality product in that segment. And guess what? Tesla has done the same over the last few years. They've established themselves as a very high, prestigious brand in the automotive space, and people actually go out there and drool over owning a Tesla at some point in their life. So I would say this is a very, very similar mindset between Apple and Tesla. So another big point that was brought up in this article, which I think is pretty important to note, is that Elon Musk has obviously made it clear that he wants to take Tesla private at some point. And with a sale to Apple, that's exactly what would happen here. In addition to this, they would also pretty much get unlimited funding from Apple's cash reserve, and they'll be able to actually expand their lineups and release even more vehicles in the electric space. So now Tesla currently has a market cap around $60 billion, so even if Apple pays a premium up to like $70 or $80 billion, Apple would still have a lot of cash on hand, which they can use for other acquisitions as well. Now, they would also be in a position where they still have more cash than debt, so investors would still be more or less happy with this acquisition if Apple can show the growth that they can see with acquiring a company like Tesla. Now, the real question really to ask here is, would Elon Musk really sell Tesla to Apple? Now, chances are probably not. But the interesting thing is that he has shown a lot of interest in wanting to spend more time at SpaceX. So if he did sell Tesla to Apple, this would actually give him a lot more time to spend at SpaceX, most likely. And he would also have some funding from the acquisition, which you could then pour into SpaceX. So really, even though he may not want to sell Tesla to Apple, it may be the best business decision for him, for Tesla, and for SpaceX in the future. And honestly, truly, I can see this deal happening at some point. The main reasons are because Apple can afford it, it would open up a new market segment that they are clearly looking to expand into, and it'll help Apple maintain that 20% plus growth year over year. But in the end, are any of these deals likely to happen? Maybe not. Remember, Apple's largest deal before this was $3 billion on an acquisition. So spending $70, $80, $100, $150 billion on an acquisition is very unlikely. Now, it doesn't mean that it can't happen in the future. It just means that it's probably not going to happen in the future. However, the interesting thing is that if a deal with any of these three companies really does come to fruition, that will really rattle the industry. It'll really scare off any competitors in those spaces that they plan to enter in. And really, that acquisition could help to propel Apple to be the first $10 trillion market cap company in the future. So guys, if you enjoyed this, remember, drop a huge like down below. Let's get 150 likes on this video. But either way, guys, don't forget to invest positively, and I'll see you in the next one. Peace.